This is your daily market review for Wednesday, February 1st, 2023. Let's go. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at eXp Realty, aka the Trading Agent, and this is your daily market review for Wednesday, February 1st, 2023, FOMC day. This is going to be a good recap review. Please stick around. A lot to talk about. I'm pretty excited to talk about it. Personally, myself, I think today is one of those days where if you've never been caught in a trap or you don't understand how traps work, liquidity, the market action at inflection points, potentially how things kind of play out in these circumstances, then this is going to be a good video for you to watch and pay attention to. So, what did we see today from Fed Powell? Again, posted everything in the Discord room, posted a lot of insights in there and tried to keep people a little bit abreast of what's going on with the Fed said. Basically, really nothing, in my opinion. Now, a lot of people are going to argue that, you know, they're dovish, hawkish, I mean, they really didn't say anything different. They want to get inflation down, obviously. That's their goal. And after that, they'll adjust their course. But here's the thing, and I've just reiterated it over and over. The Feds, are talking about a soft landing. And when people see soft landing, they need to be very cognizant of that. They've never navigated one. That's the first of all. That's the problem. You throw liquidity into a system aggressively, endlessly, well, you have to pull it out eventually. And then if you get inflation over 6%, which is typically 5-6%, which becomes one of those levels where they have to raise interest rates above that to get inflation under control. I mean, you've never seen them not be able to do so, or never seen them be able to get the rates over the CPI. Like they always do, because they always essentially have to go. I'm just way to word is like they have to go too far, just like they went too far, right, to the downside, right? Like cutting rates, keeping them down for too long. What's the other side of that, right? What's the other side? Well, it's clearly they have to continue to pull liquidity out, or you're going to have massive inflation. Now, we've already got significant inflation, and I don't think really that's the biggest thing to worry about at the moment. The biggest thing to worry about at the moment is, right, going forward, unemployment, job losses, obviously, inflation, and anchoring in. Because if you get a double whammy of sustained higher inflation above their 2% target, and you start getting unemployment up, which it looks like it's going to start kicking up. Obviously, if you've been following on Twitter, you've seen a ton of the post about, in general, just who's laying off who and who's doing what. So, knowing such, again, you don't know if today's the day, right? You just don't know for sure. Sorry, I'm just reading over Meta's stuff. They literally just dropped miss, but they're doing a big buyback. They're lowering their expenses. We'll see. Again, I think $40 billion buyback is an incredible waste of money, considering that they need to really invest in their own future. But let's get caught on that topic. So, going forward, think about how a trap plays out, right? If you've never been in one, take notes of this. And we've talked about this. I mean, there's a video on this, the Back to Basics, right? Follow on Twitter, posting continuous updates, trying to keep people informed of what we're up to, epic traps. Anyway, just levels, what's going on, and then check that out. I mean, here's the days before the FOMC day. Talked about, there's 57 of these. One of these is bull and bear traps. Where is it? Whatever. If you like to find it, it's there. Oh, it's literally right there. Cool. So, what do we know about traps, right? They're very emotional. People get squeezed, whether it's the shorts or the bulls. And then typically there's a pocket of air after that, where there's nothing left that can be, once you exhaust, after that, it pulls back pretty hard potentially, and especially when traps. And we'll show you the last trap in the market. But just keep that in mind going forward. Like, I know a lot of people, and again, the people who are excited about being bullish are always the same people who are extremely bullish at the highs, extremely bearish at the lows. Those same folks come out of the woodworks to troll and talk junk, typically. Seeing that happen again, and I use these people as, I mean, not like use, but like they're sentiment barometers. And we talked about recently like how I've gotten a ton of phone calls, get a lot of texts about, hey, the bull market's back on, right? Time will tell. I disagree. Hence why going large into shorts today makes sense. We'll see. We'll explain all of it why. And again, we could be early, could be wrong. I mean, you just have to have, like, all these scenarios have to be in your head. It's not like I'm all in, right? I have to be right. I could be right. I can't be wrong. Bitcoin. Chopping here. Not surprised. Holding up high, tight. We'll see. I mean, it's not really breaking out. Could it get up to 24? That makes sense. Maybe. Here's things that don't make sense, right? Oil. If the market's really excited about future growth, everything's going to be fine. Oil's double topping here. Rolling over. It breaks the trend line. I mean, I don't know why it wouldn't get down in the mid-60s at some point. Now people argue, oh, good, deflation's coming down. Okay. Can't argue that. Can't argue that. Natural gas. Wow. Are futures going negative? I mean, something's not right here. I know people are trying to pick the bottom here, and this is one of those trades where I just, leave it alone. I don't really have a good instinct on it. So if that's the case, and I mean instinct mean like it just hasn't acted right, and if it can't act right now, maybe be a little late than early, because I don't think it's going to take off without you, kind of thing. Meta after hours is now at 176. Very curious if we get to, check this out on the monthly. Do we get up into this 100 month? That's where I'd be looking to short. 178, 180 area. Maybe one. I mean, I guess that's probably a little high. Let me move it down to here. I'd be watching this zone, right? That's probably the extreme 190, but I'd say somewhere in this area makes sense. Like, that's a big wide gap of long wicks and areas. But I mean, like I said, pull the middle out of it, 100 month. That seems logical. We'll see. I mean, a big buyback, I mean, it's such a bad idea. I mean, this is the thing. IBM did this for a long time, and then eventually the market penalized them, right? Because they weren't growing. They had no growth prospects. They were just buying back stock. Great for the CEO and C-suite. Terrible for the investors. Dollar. Again, things that get me excited. Look what happened. Liquidity event. Had this line, this area for a while. Said, man, if we get down there, that's probably going to be the bottom. We'll see what happens here. I love it. Love it. Because again, this is why you're going to see the picture of how everything feels like, all right, well, then they did get to the extremes. And if they get to the extremes, there's probably not going to be much left. And if it's fast, it's even better, right? Because then that's a blow off. Is this going to be a novice gap, in my opinion? Probably. Now, again, there's a lot of gaps in the EUP. But keep in mind, it loves to do the opposite of what people think is going to happen before. The trend changes. TLT. Back up against the range highs. We shall see. The VIX closes at 1816. That's hilarious. Every time it gets down here, gift from the gods. Remember, again, people who said, oh, the market this, like, market's probably going to rally and hold up pretty well if the VIX does what? Continues to get smushed. Okay, well, you're at an inflection point again with a VIX. Another VIX retest. 3 times the charm. That's where I think it gets a little difficult, right? Because do you expect that? No. But 3rd time's the charm. SPY, let's talk about it. All right, you got to the very top of our box. I honestly didn't think that was possible today, but again, this is where you don't sit here and go, well, I know for sure. No, you don't think like that. You just can't. Please don't do that. You get back up there, you blow off in the last 30 minutes. Check the 10-minute off. I mean, check this out, the 10-minute, if I can bring it in. I mean, shorts got absolutely destroyed. They got squeezed, and then it was like, goodbye, started selling. Not surprised we closed around 410. You're over a little bit with Meta after hours. Again, it's really hard to short a stock to earn it. You don't know. So if you had a little trade and you had a put or you had it called to hedge it, I mean, again, you got to be thoughtful because you just don't know the reaction. I mean, everyone knows. Like, I'm looking through their guidance as we speak. Revenue down 5%, right? Total expenses, they're guiding them down. That's great. they're going to expect a record estimated $1 billion in restructuring charges. I mean, they're literally throwing in a lot of the towels that I think are going to get worse. But you don't know what the stock's going to do. So anyway, back to SPY. See what happens here. Now, if you said bingo card was you have to wait for 410, congratulations. Like that. I mean, that's the thing. Like, I mean, I'm not going to sit here and say, well, it has to get to this level. That's the problem with traps, right? Does anyone remember October? Yeah, very clearly. He said this is the trap. This was game over. Went below the range. Closed back in it. Retested the next day. Off to the races. Well, now you've got this excitement, right? The fear and greed index is up into the 70s, maybe 80s. I don't know, after today. Long wick. You break out of our little channel. How much higher can it go? That's tough to know. Could this be the top? Because I think a lot of people said, again, I try to give credit to people when they say certain things and expect certain things. I mean, we'll see. I mean, congratulations. Say if Kern's listen or someone else, I can't remember who said maybe 40, 413, 415, whatever. I mean, that's hell yeah. It's the 50% fib. It's a big resistance area. A lot of candles open and close down here, long wicks. Are we just going to take off, start the next bull market? Remember, trend lines love to get violated before they do the opposite. Remember, we violated down here and then came back. Now we're breaking out, which, again, shorts. I mean, I would consider this more of a short squeeze. I mean, you have tons of earnings and jobs on Friday. If you got in, I mean, I'm essentially all in short. Now, again, if I have to stop out, fine. But I'm not in a position where I have to sit here and be like, I got to be right by Friday. I made sure in the back of my mind that whatever I did, I had to know. If I'm not right away, fine. I can handle that. But I can't handle like 425 or retesting like 430s. Like, I won't be around for that. That just is no way, Jose. QQQ. The trash floats last. Wow. Wowzers. I mean, we got to like the old, I don't know, this line I'd drawn for a while, support resistance area. And again, remember, tons of liquidity right here. Look at these candles, y'all. Look at these candles. The market has muscle memory. Remember we talked about high volume highs and lows love to trigger and test? Wow. Again, market makers, golf clap. You guys did a hell of a job getting it up to there. Congrats. I mean, that's next level stuff. Pulling up the NQs just real quick. So I'm like 12.5. Interesting. Huh. Okay. Yeah, back to the Qs. This is, to me, this feels like the blow off, right? If you look at the intraday action. Now, I know we're back. I think we're back at 303.40. After hours, we're back up near the highs. We'll see. We'll see if Meta holds. Remember, just keep this in mind. If you're watching this after the fact, you're newer or whatever, what do you got to do? You got to let them talk. They're probably going to, I don't know how to explain this other than sometimes the numbers come out and then the words come out. And it's the same thing as like the Feds today. Like if you got excited about the 2 o'clock release of a quarter rate hike, as we said, like that doesn't matter. That wasn't, it was when they talked, when the Fed spoke. And clearly the Fed did what? They said what they're going to say. I mean, it's all subject to interpretation. And this is the thing that I love to see, though, is like, what is the media pushing? Soft landing. Here comes the soft landing. Okay. All right, we'll see if that's the case. IWM. Wow. If that ain't a blow off. What is? Again, check the monthly out. You're in some major areas. Do you get the 20-month? That could come into play. I mean, we'll see. Again, here you can see it probably better on the weekly. Just pull this across a lot of candles. I mean, I don't want to carry everything, but yeah, I guess probably that's the max upside. Probably 200. Again, will we get there? I don't know. It's now leading. So if you've been a bear, this is where if you're bearish like me and you're all in, you're still not like, you're not sitting here comfortable. You're just going with the same, I guess what's the best way to describe it for me? You know the liquidity and the action have created the all-in effect. You just don't know how much longer it could last. And so you have to be mentally prepared to be wrong near term, but know that once the all-in effect is created, there's a vacuum. And again, if you guys have read Livermore book, you know I talk about like how like the market tends to unload on the backside pretty aggressively too. Well, there's no pockets of support, so stops just get knocked constantly, triggering like the domino effect the other way. Does that make sense? Keep an eye on what's going to happen the next couple of days. DIA, right? Oh man, the DIA should be on fire, right? Nah, finishes up 11 cents. A little bit of an anomaly. Makes the test at the highs? No. We're going to go through again. You can argue the Qs and the IWM look bullish. DIA looks weak. SPI retesting. Gold. Got stopped out of gold. Didn't get back into it because I was like, man, I think I just want to short junk. Now, gold at this moment, chop tight. Okay. I mean, a lot of it probably had to do with what? The dollar, right? Remember, what do you got coming up here? Continuation, maybe? Just remember, this was the Fed day. Red alert. Jay Solstice, if you're listening, you remember this. I know you pay attention. That was the Fed day, right? And then the next day, trap. And speaking of, again, trap, SPY, remember October. Go below it, come right back. Does this make sense? Traps do that. Like they lull you into a sense of security right before they pull the rug out from under you. So we'll see. Silver, again, not really confirming it. Doesn't really look that great. GDX, now cool, that's up. I mean, it should probably pop if gold did, but is it making new highs? No. Looks more like the left shoulder, right shoulder, and the head. Maybe it retests the highs. I don't know. GDXJ. Junior's lead, right? Okay. Gets back over the 20-day. Didn't even fill the gap today. All right. Will it get there? Probably if the market holds up into tomorrow. We'll see. Again, Meta could literally, I mean, Zuckerberg, I don't know. Gunlap says, Oddsberg rate cut this year or a coin flip. Says it's clear the Fed is near the end of their rate hiking cycle. Okay, we'll see. I mean, everyone's assuming inflation is just going to disappear. Doesn't seem to be. AG, yeah, that doesn't confirm anything. AEM, not back at the high as the market's making highs. Curious case of something's not right. Again, holding the 200-day, chopping. Curious, we'll see. PAAS hit the trend line, backs off, retesting it. Curious, we shall see. Now AMD, let's get into the semis because this is where I've got some big shorts. Not surprised. Hits one of our range levels and closes that, and I've said this about a dozen times. AMD loves to end trends on big green candles. Well, their earnings, I mean, whatever. You can argue good, bad, terrible, not that bad. We'll see. I mean, this to me doesn't, people would say, look, that looks bullish. And I'd say, well, that looks to me like the end of the move, actually. Could we be wrong? Absolutely. That's why you have to have it back in your mind. Like, there's no certainty. It's just repeating patterns. And we talked about it here, like big green, and then it went. Now you have the gap up on earnings. Okay. We'll see. Right? We'll see. NVIDIA. Like the short when it was up here last week. Now it gets, you talked about, like, if you could get up to the 209, 210. If I didn't, I apologize, but, I mean, look at the level. This is your job to look at these levels, right? There. Now, again, this is why I think trading can be so hard if you don't do a lot of work. You don't know these spots, right? You just, and again, do they have to hit perfectly? Can they have wicks? Yeah, yes. Absolutely. But if you didn't see it, weren't paying attention. SMH. All right, got over our 0.618. What did it do? Got to the top of the box. All right. We'll see. I mean, that's the thing. I mean, I've said this 1,000 times, and I will say, I'd like to redraw this here for a second just to make sure. Yeah, I didn't think so. what is it? Is there a 0.6? No, okay. Just whatever. It doesn't matter. It's over that 0.618. And it lines up with still the 50 there. That's interesting. I've said this 1,000 times. I mean, I don't think semis are coming back to Earth. I mean, they're coming back to Earth. They're not going to be on this monster run. And so today's action, to me, exhaustive. Sometimes it looks like that. Sometimes it looks like that. Sometimes it looks like that. Right? Gap up in green. Green followed by the next day. Personally, comfortable with Soxus. I mean, again, that's where I was like, I've got 1,300 shares. I'm like, I want 25. I'm like, all right, never mind. I want more than that. Once it got down to like as close, like it got down to 19 at 56, but 20 area just started saying, all right, you got to hold your nose, do what you think is right, and live with the consequences. That's all you can really do in trading. Interesting. Gunlock speaking after hour. He says odds of recession are down, but still above 50%. It's funny how they get big speakers on talking today. And if the market was down, pretty sure he'd say the odds of recession are 90%. But since the market's up, he's hedging his bet to make himself not look stupid, and he's saying 50-50. I'm here going to be consistent. I still think it's 100% odds because there's never been a soft landing. Never been a soft landing when feds have to go uber rate hike. We shall see. All right, let's keep moving through this quicker. Adobe. All right, hit your 0.382. Nice. All right, we filled the gap. Now you got up into the next level of resistance. Now, again, I don't know if anyone's really shorting this, just watching it. Again, a lot of things are going to be up at resistance, especially the trash tech names. Apple should have been up $10. Whoa, hold on. It's up $1 today? Raggy. I don't know. We'll see what happens. Earnings tomorrow after the close. Baba in the morning. Watch that 200-day. Red alert. Oh, why do I? Hold on. It's like, wait, hold on. You got an alarm there. We need to add an alarm here. Thank you. Amazon. 105. Top of our range. Into the gap. Keep an eye on it. CRM. We talked about this name getting some institutional money. I wouldn't have probably shorted it, and looking like that was a good choice. We'll see. Guggenheim. Up against the box. We'll see what happens. Could it get to the 200-day? We talked about that. Potentially. That might make sense with earnings. All of these earnings. Meta. What's it at now? 180 after hours. Okay. Remember on the monthly I showed you earlier? If you did not take any profits today and you're 100% unhedged into earnings, 100%, I don't know how to tell you. The lesson has to be learned at some point. You're always rolling the dice through earnings. Just remember that. You just don't know. But we'll see what Mark the Shark says later, right? Like, we don't know. He's got his conference call. I mean, he could tank Meta. I don't know. We'll see. Hey, we'll see. Again, I mean, I reduced my exposure, as I told you guys, and I got a little bit. I'm not excited about it. But again, I mean, it's like comfortable with the loss, and that's not ideal. Like, being comfortable, what do you do at this point? Right? You either set your stop after hours and hope it hits when it moves so fast, or you take the odds of a complete catastrophic event where it rallies like this up, and could be, and you pay your risk down. You live and you learn, right? Harry says, lower guidance misses on earnings plus 20%. A concept of the market ripping today should have foreseen that. You live and you learn. Well, you live and you learn that no matter what happens, you don't assume anything through earnings. So if you did buy a call against your short shares, that was the play. What date, what strike? I mean, in the money. You could probably buy it short dated, because if it's going to squeeze, it'll probably be quick. I just feel bad for folks who, again, because I don't get up and down based on winning and losing. Like, I'm just like, what else can I do? Right? You look at this chart and you go, man, this thing's a piece of junk. Went from 88 up to 153. Now it's up at 180 after hours. Alert went off. What do you want to do? Microsoft gets the 200-day. Now what? NDAQ, again, this is things that I just noticed. I'm like, this stock, if tech is really the future and really going to be trading and people are going to be aggressively like all in and the market's going to love what tech has in the future, NDAQ does not look right. That looks real bad. Keep that on your watch list. MicroStrategy. All right, into the box. Can I get up to the 280s? Netflix. Jobs numbers came out showing more people being unemployed, and Netflix rallied. I guess that's good for them. I mean, I kind of was mind boggled by that, but okay. Are we surprised it bounced? No. But it peaked first? Yes. Roblox. At the trend. At the trend. This is a breakout. This is a stock I would not short. But I would watch what happens here. Again, if this thing dumps, I'm always looking to buy it. Tesla. Back up. Back up at the top of the box. Like, people are like, oh, you draw those boxes before you start the video. I'm like, no, I don't. They all usually line up with something. Here you go. At the top of it, what do we do? I mean, to me, it feels like that's the liquidity trap, and now this is a retest. Be careful. Let's go through the materials names, because this is where, again, it can be a little confusing. Letter X got earnings, tomorrow afternoon with all the big dogs. All right, holding up. Now, if it sees the 30s, 30 handle, I'd be careful. I would be very careful with this one. I don't believe it's going to break out. Nucor. Building on yesterday's action, which I thought looked bearish. And a lot of us would probably all argue that like this looks bearish, but not something I'd recommend. Not, again, I mean, Nucor is not trash. That's why it's like, got to be careful shorting certain commodities. Just like in gold, you got to be like, all right, willing to toss that one away. Like, to me, Meta, I'm not really too concerned about long-term Meta going down. Gold, materials names, inflation, not so much. What's up, Cat? VALE finishes down 23 cents over the 20-day. Tough to know. But it hits the trend line that it failed at, that's for sure. Now what? I don't know. Arrow. Talked about how that one popped pretty good yesterday. Little follow through today. It just doesn't, like, the amplitude of today's action compared to what the market did doesn't really fit. So that's why I look at this as like an anomaly. You would think this candle would be right here and that candle would be right here on today's action. Just, again, notice things that seem a little fishy, right? CCJ, hell yeah, breaks out. Is it going to sustain? Will it sustain? I don't know. Is it just a gap? Oh, shit. Taki mushrooms. Is that just a fill of the gap and retest? That looks pretty level to me. I would keep an eye on it. Again, materials names, I mean, I think long term, but near term, if the market peels, I don't trust these. CF, man, this thing was up a point and change, and it was like, got back up into this like mid 80s, came right back down. Mosaic finished 32 cents up. Again, you'd think these ag names would be ripping if inflation is like one of the things. What's the best way? Like if the market, because again, we're talking about oil, like these names would have demand if the economy was going to be strong. No. Doesn't look like it. NTR holding up better than some of those other ones. Does it need the 200-day? I mean, it kind of lines up. Aaron talked about profits being taken, like trying to grip sand. Well, not back at the highs. I'd be concerned. Now, again, if you bought the dip, it made sense at 50. Nice little trade there. Again, a lot of these just not much going on. Caterpillar shorted this one yesterday and the day before on earnings. Again, stocks that are up into earnings, and I mean up. Not like, again, Meta, again, being huge short and taking, you don't know. This is a huge run, though, for them. Like, this has been strong, right? Can't get over the 20-day. Added shorts yesterday at the 8. We'll see what happens here. It's probably the best looking trade next to the XLF, which, again, how strong is the market without financials? If you're listening, contrarians, haters, people who think that this is somehow a cult of evidence, where the hell are the financials and why are they not leading? Got to ask yourself that. All right, now people say, oh, what's up at the highs? Yeah. But in a day when the market's up 1 to 2%, depending on the name, the XLF is literally flat. 100% flat. 0.0% gain today. Right? Got to be careful. JP Morgan, right? That should be up $3. Nope. Closed down. Lower highs. Well, how about Morgan Stanley, Dan? Like, that one should be back up near the highs. Yeah, tried, and then it wicked out again. You have to look at this as for what it is. That looks distributive to me, right? On days like today, when the market's ripping, Goldman Sachs is not up $5. Closes down 10 cents with a wick. Something is wrong, right? Something is wrong. XBI, man, that thing should be up $3, right? Another wick, closes right back into the range. Now, again, this blue box is obviously showing you what couldn't get stuck in. Just notice. Keep notice of things, right? Solar. Holding some lows, right? It's like, oh boy. Sorry, headphones just died. Back at the highs, or the recent highs. Okay. Sedge, ENPH, right? They're popping up a little bit. Okay, cool. They talked about this one this gapping down being potentially like a bottom near term, or the market, if it rolled over. Obviously, if the market didn't roll over, it would rally some. Well, here you go, back to the 20-day. Wick it and hit it. Sedge, just kind of, here you go, up near the highs. I like these things for shorts, obviously. I mean, someone was saying, like, look at the 182 area. I'm like, holy crap. Closed right at the trend line again. Right? Doesn't really look that good to me. I'm just curious. HYG. Okay, not confirming new high. Dividend today. Ex-divvy. Keep an eye on it. Let's end it with oil, right? Oil should be up like 3 or 4%, right? Nat gas. People keep telling me they're buying UNG, and I'm like, please don't. Please don't. Look at the volume today. I mean, I hope it's at the bottom. Hope it's the bottom. I don't know. Nat gas is being real hard. Well, XOP, right? It should rally even though the market was up. Nope. 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 ExxonMobil, right? That should be up today. Hits the rally highs again, like this is the monthly trend line. All right, PXD, it'll be flat, right? Right, Dan? Down $6. What is going on here? I thought global growth's coming back. Everyone's fine. Got to get excited. Get bullish. EQT, always down. Makes a new low. Closes at the lows. Tough to know. All right, tomorrow is what? Big earnings days after the close. Got productivity, unit, labor cost, factory orders in the morning. BABA in the morning. You're going to have to be very careful here. This is the thing. Remember, sentiment. Think like the market makers. If you've listened this far, drop a comment, leave a like, say hi to Solomon for me. I think people need to be just aware of this. Like the same folks, and I'm not talking about like folks in general, like the same like mentality of the market doing what? At extremes, creating mass hysteria, mass emotion, mass regret eventually, and getting the market makers unlimited liquidity to unload into, or like at the bottom, buy. You have to keep that in mind. This is a liquidity game. The levels, the repeating patterns, the price action, that's all good and all. And that's the thing about charting. Like that tries to give you that, but you have to remember liquidity, events, the market makers, I mean, whatever you want to call it, like if they create the squeeze, smart money, institutions that are killing it, I mean, whatever you want to call smart money, market makers in that realm, this is what they're thinking. Like think of Livermore. At the lows, he needed unlimited liquidity to cover his shorts to get out without doing what? Getting stuck. Imagine if you are long huge amounts of stock. What are you doing into this? Now, again, I'm not saying today has to be the top. I don't know. I think it might be. But with Meta, you never know. I'm just kind of curious where it's at after hours. But you got to be thoughtful. I'm telling you, got to be thoughtful. Because if you're not, you're putting yourself in a world of hurt. And this is the thing. There is going to be pain in trading. If you were sitting here and you're talking junk, trolling, making fun of people who think this is like somehow stupid education, then fine. You're not the person that needs to hear this, because I guarantee, I know your outcome. It's a grave in trading. You're a trading account blown up. There's going to be pain because you can't always be perfect with your entries and your exits. Now, some people will say, well, why don't you wait for the next move to confirm? Well, what if tomorrow, what if it's Thursday? I don't know this. What if it's Friday, right? What if you're watching the SPY and it's just a big gap down? I mean, I would rather get in at the excitement, right? Like at the bottom, at the lows, right? Like it turned around. Big gap down, turned around. I feel like people just don't look at the charts. Do you remember this? Boom. Right? Chopping up, boom. And then it just starts to melt. I mean, you can see it at the bottoms too. Professional gaps, and they start the runs. Professional gap. I'm just trying to make you understand why, like, you have to have at some point a plan and know that you can be wrong early. That gap, the next, I mean, just this is the thing. Here you go. I'm just amazed how so many people love to like criticize how, and again, play this game like they can't be wrong, right? Or criticize trying to be proactive, because you don't realize, and this comes from naivety. I'm just sorry. Like you are an absolute novice if you think somehow you're going to get into trading and you're going to be right all the time, and being early is a bad thing. Now, again, you have to have stops, discipline, risk parameters. But this is why you have to have time on your side. This is why day trading can be very difficult, but also confusing. Because here's the thing. If you're trading this and now buying only dips, when the trend changes, it's going to get you. Just like at the lows, everyone's bearish, and they're shorting the lows, and then it starts rallying, and they're shorting they give all their profits back. Keep that in mind. Do you guys remember this? Do y'all people remember this? Talking to the people who actually listen and pay attention. Do y'all remember this? Every short, every day it was considered then squeeze. And then it dropped and just short. Now you're back at the highs. And then it pulls back. And now everyone's excited for the new bull market. And it looks like we're breaking out. I don't write the scripts for this stuff, but obviously you get to read the script as it plays out, and you can watch the movie. If you are watching this as a movie, how do you feel right now? If you're pretty calm and like collected here, and again, if you're in heat from being down in some trades, or you had some trade, again, try not to watch your account balance as an indicator for the market, because it's not. It's more of an indicator of your trade location. So that's where it gets very confusing, right? If you're down and you're early, or you did something wrong, like now your emotions are doing what? They're confusing you. They're not allowing you to be impartial to like what can happen at inflection points. I hope this helps. I really do. And again, the people who are sitting here looking for the omnipotent certainty, like, holy grail, you're just not going to find it. There's going to be times where you feel like you can't lose, and that's the problem, is right before you can't lose is the start of a downtrend. It's no different than in your psychology is no different than a trap, right? Because at the highs, when everyone's all in, you feel like you can't be wrong. That's the high. At the lows, where the world's going to end and you're shorting, and you know what I mean? Like you just can't get anything right. The market does what? It flips. So, hope this helps. Be thoughtful. Please, 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 please. You got to stay solvent. You got to stay solvent through all this. And again, if you're not day trading, you're swinging, you think the next bull market is starting, you probably need to start taking some money out of your retirement accounts and put it into cash. Again, could it be one? Well, if it is, then you can buy it up here. And if it's going to be a multi-year bull market, who cares? This has been a nice trade. But here's the biggest issue, and I'm just going to repeat it again. The Feds have never navigated a soft landing. When you pull liquidity out of the market, it tends to lead to what? Blowouts. The VIX has never peaked in the 30s for a bear market. Not once. Not once. 2008. 2020. The 2000s up into the 40s. I mean, shoot. I mean, what is it? 2001, you got spikes up into the 43. You got some. I mean, it's interesting, the wicks. You see this? You got into the mid 40s. Look at where we're at. Look at this particular move. Do you think this is the end of the bear market and that they're going to navigate a soft landing? No. Now, it doesn't mean you can't go higher or that it could go a little higher and that like it could trap more, but it's telling you right now. Like if you believe there's a bull market coming, today's information is exactly what the market makers want you to believe before an inflection point. I'll end it there. Talk to you later. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.